Hey, welcome everybody to the 40 Finance channel. Well, we've got our annual changes to the Nasdaq 100, the top 100 stocks by market cap in the Nasdaq. And this impacts the QQQ, the TQQQ, and everything tied to Qs, basically. So we're going to review what was added, what was deleted, what it means, and how this reconstitution that happens every year in December, how are these names selected? I'll go through that very quickly as well. All right, let's go through the names here on this news release on Seeking Alpha. By the way, the $99 sale for Seeking Alpha is still in effect here in December. That is $99 for 12 full months of their premium service. That's not $99 a month. That's $99 total for 12 months. And so you will see a lot of Seeking Alpha on my screen today. And if you want to learn more about this special deal and potentially support my channel as well, my affiliate link is in the description. You also get a 7-day free trial on the front end of this $99 one-year deal. So you'll have a few days to poke around before they actually charge your card. Okay, back to business. Here are the names that are adding this year: CoStar Group, Rivian Automotive, Warner Brothers Discovery, GlobalFoundries, Baker Hughes, and Diamondback Energy. So you got some interesting names in there. I would say in particular Diamondback Energy, which comes in as an energy play in the QQQ. And the QQQ does have different sectors. It's just not all technology. I've talked about it before. So we'll look at this one and the others more closely here in a second. But as far as who dropped out, VeriSign, Skyworks Solutions, which is surprising, Splunk, Baidu, Match Group, DocuSign, who just had a pretty good quarter actually, and NetEase. So you look at some of those names, and those were a lot of stocks that I would say performed pretty well during the pandemic era. And, depending on when you bought in or you explored, if you took something like Splunk, and even Baidu at some point, these were stocks that were very popular amongst traders, and now they are out of the Nasdaq 100 index. All right, so how did we get here on the 6 names that were added and the 6 that were deleted? I'm going to refer to this blog post I wrote back in October in anticipation of this year's changes, and it's just a simple 12 things to know about the QQQ. This is on 40finance.com if you ever want to check it out. And I'm going to go down, I think it's number 6. Yes, number 6 is where I broke this out. The Nasdaq selects and removes holdings from the Nasdaq 100 index annually in December. This process is called Reconstitution. In 2022, new stock additions and removals will be announced in early December, which is what we just had, and they go into effect at the closing of the trading day on December 16th, 2022. That has since been updated, and it will go in on December 19th. So this date here is wrong on the 16th. It'll actually be the 19th. And here's the process for reconstitution. First of all, everything in the Qs is based, or everything in the Nasdaq 100 is based on market cap. And the QQQ is based off of the Nasdaq 100. It's an ETF that is based off of the Nasdaq 100. And how they do this, I'll go through the 3 quick steps. The top 75 ranked issuers, Nasdaq stocks by market cap, will be selected for inclusion in the index. Now, number 2, outside of the top 75, any other issuers that were already members of the index as of the reconstitution reference date and are ranked within the top 100 are also selected. So basically, if you were in, let's just say, the 80th position and you are still within the top 100, then you carry over to the next year. All right, now the third criteria, in the event that fewer than 100 issuers pass the first 2 criteria, those remaining positions will be filled in rank order by issuers currently in the index ranked in positions 101 to 125 that were ranked in the top 100 at the previous reconstitution. So that is for people who have perhaps flipped in and flipped out of the Nasdaq 100, over the previous year, they have an opportunity to dip back in. Now, if you get through that third criteria, from there, it's just straight market cap. Okay, so then it's just based straight on market cap. So if you got kicked out last time, but you still remain in 101 to 125 positions by market cap, you'll be brought back into the index. If there's no names that go from there through the first, second, and third criteria, then you're taking the next name as it's built up by market cap within the current Nasdaq 100. All right, a couple related points. The QQQ added 6 new stocks for 2022. Last year, 2021, in December, they added 6. So it just so happens that they added 6 again this year. Last year, they were Airbnb, Fortinet, Palo Alto Networks, Lucid, Zscaler, and Datadog. Okay, so 6 names on there that were not impacted in the most recent Reconstitution announcement. As far as removals last year, we had CDW, Fox Corporation, Cerner Corporation, Checkpoint Software, Trip.com, and Insight Corporation. Now, you see this number 9. The Nasdaq 100 index is rebalanced quarterly in March, June, September, and December. This quarterly rebalance is different than the reconstitution, okay? The reconstitution is additions and deletions to the index. That only happens once a year. And then beyond reconstitution, there's 4 rebalances where the weighting of each stock is changed, sometimes only by, decimals of a percentage point, but that gets rebalanced quarterly, but it does not add or delete any names. So this is a big time of year here in December in terms of any new additions or deletions. And then with that being said, even though you have this annual reconstitution quarterly rebalance, we all know that the stock market, of course, is open on every business day. The values of stocks change every day. So technically, the weight of each QQQ holding and Nasdaq 100 holding, technically they can change every day as market caps fluctuate because the rebalance essentially purchases, a certain amount of shares. And then, in between quarters, those shares gain and lose value just like every other stock. Okay, next let's jump in and learn something about our new friends in the QQQ. You got CoStar Group, CSGP, currently at $81.01. Over the past year, it is actually up 3.81%. Let's see, year to date, just barely, 2.75%. And you take a quick peek at the 52-week range, 49 to 85. You got a forward EPS of $1.25, PE looking forward of 64.71. Market cap is $32 billion. Now, I was not familiar with this company until I went down here on Seeking Alpha and read this company profile. They provide information analytics and online marketplace services to commercial real estate, hospitality, residential, and related professional industries in the United States, Canada, Europe, and Asia Pacific, and Latin America. CoStar Property provides inventory of office, industrial, retail, multifamily, etc., and land. CoStar Comps is a database of comparable sales transactions, and CoStar Market Analytics is used to view and report on aggregated market and sub-market trends. And you see here at the bottom, at the end of the day, this is grouped into the industrial sector. The industry is research and consulting, founded in 1987, and it's got about 4,700 employees there based in Washington, D.C. Scrolling down here, looking at revenue, it looks like the company, just on this bar chart, has grown revenue each year. The 2022 and 23 lines there are estimates, but it looks like it is expecting growth over the next 2 years as well. Then as far as earnings per share, I'm going to switch this to annual if they have it. Earnings per share looks like it's doing a pretty good job of growing since 2017. They might have had a backwards year in 2020, probably like a lot of people did. And the estimates for the next 2 years are at least trending upwards right now. All right, next up we have Rivian. And to me, this one was probably a big surprise just because it does not have a lot of wind in its sails here lately. You can see 1 year, you're minus 77%. Break that out. Oh, they don't even have a 5-year chart. So they came on board in November of 2021. And it must be a market cap thing. Their market cap is at 25 billion. They are not profitable. But Rivian is the maker of electric cars. I think actually electric trucks is their specialty. I'll read the profile. Designs, develops, manufactures electric vehicles and accessories, 5-passenger pickups, and sport utility vehicles. It also has a commercial division for an electric delivery van with collaboration with Amazon, and sells its products directly to customers in the consumer and commercial markets. They have 10,000 employees in the United States, and they're in consumer discretionary sector automobile manufacturers. So we've got another EV company in the QQQ, at least as of December 19th. You look at revenue, it's not a ton of revenue. Actually, this is quarterly. Let me switch to annual. So 2022 estimate is $1.7 billion. So not a ton of money there. If they do, in fact, grow as anticipated in 2023, you get to close to 4.5, 5 times that number. So perhaps they're getting ready to take off. Earnings per share, this is not going to be good. You're in the negative. But this is a positive chart in the sense that while these are estimates, it's losing less money every year. I'm trying to only invest in companies that have a positive EPS in terms of standalone stocks, so I'm not really a candidate for Rivian, but it did, from a market cap perspective, meet the criteria for inclusion. All right, next is Warner Brothers Discovery, who made a lot of moves over the past couple years, most notably, obviously, merging with Discovery. On the 1 year, you're minus 52%. Similar to Rivian, this one is also not showing a positive EPS going forward. However, it does have almost a $27 billion market cap. Let's take a look at how they describe the company after all the conglomerations. They're a media company, content access across various distribution platforms in approximately 50 languages, produces, develops, and distributes feature films, television, gaming, and other content. They have direct-to-consumer, theatrical TV content, and games licensing. Company owns and operates various television networks under Discovery Channel, HGTV, Food Network, TLC, Animal Planet, Investigation Discovery, Travel Channel, Science, Motor Trend, and Discovery Kids, amongst some other brands of Discovery. So it's definitely a big media company, and that puts it in communication services under movies and entertainment, based in New York, about 11,000 employees. It doesn't have a founded date because these two companies merged. Revenue, this will be interesting because now you have, the merger, which is going to obviously show a significant impact on revenue. The estimate, $43 billion for next year. That would be significantly above the $12 billion they closed in 2021. And then earnings per share, this one's also going to be very hard to dissect. Looks like Warner Group or Discovery, one of the two parts, was profitable through 2021. You're looking at basically a net loss this year, and then hopefully in 2023, they cut that down significantly heading into the future. All right, next stock is GlobalFoundries, which is a semiconductor foundry company. My 2 cents, I sort of like this addition. 1 year plus 8.32%, EPS of $2.90, forward PE of 21.84. I should say that's a forward EPS of $2.90, so projected. $34 billion market cap. And if we go to their description, operates a semiconductor foundry worldwide, manufactures integrated circuits which enable various electronic devices that are pervasive. The Company manufactures a range of semiconductor devices, including microprocessors, mobile application processors, baseband processors, network processors, radio frequency modems, microcontrollers, power management units, and micro electromechanical systems. So quite a diverse offering there. They are in information technology, no surprise, industry semiconductors. Got 14,000 plus in terms of employees, founded in 2009 and located in Malta, New York. Looking at their revenue from an annual standpoint, looks like 2018 and 2019, you're around $6 billion, although heading in the wrong direction. Coming out here from 2020, though, perhaps they had some COVID impact, and 21 bounced back to 6.59 billion. The estimate for next year is 8 billion. So you have a big growth year here if they land the plane December 2022, if they close the books there. However, next year is flat to, if not down a little bit in revenue. Let's check our earnings per share. Looking ahead, they were net negative in December 21. This year, they could be on pace for $2.90, assuming they hit their Q4 numbers. And then next year, $2.33. So even though I feel very good about the long-term outlook for semiconductors, this one does look like the estimates are taking a step back, at least a small step back for next year. So keep your eye on it if you're interested in this one. All right, next up we got Baker Hughes Company. This is one that I was not familiar with either. It's basically a technology provider for the energy sector. I'll give you the full description here in a minute. Over the past year, they're up 13.8%. You have forward EPS of 92 cents, forward PE of 29.36, market cap of 27 billion, and I'll get to that description here. They provide a portfolio of technologies and services to energy and industrial value chain worldwide. It operates two segments: oil field services and equipment, and industrial and energy technology. The company offers exploration, drilling, wireline, evaluation, completion, production, and intervention services, and drilling and completion fluids, wireline service, downhole completion tools. You know, this whole description, these are all things I know very little about. But, you know, let's just summarize and say it is a oil and gas provider across a lot more levels than maybe even technology. It looks like, you know, by technology, it's more like cutting edge products and materials that do the work, right? So my brain was stuck in thinking that it was software. It obviously goes way beyond that into actually tool technology is maybe the way to put it. 55,000 employees, does not show a founded date, based in Houston, Texas. On the revenue side, we have a little bit of a seesaw here. 2019 came in just shy of 24 billion. And then 2020, they lost down to 20.7 billion. Then down again in 2021. Estimate this year of 21.34 billion. That's still shy a couple billion of 2019. And then if you look ahead to 2023, 24.29 billion, that would actually get them back above the 2019 numbers if they hit those numbers. As far as EPS, looks like they've managed profitability through what I would assume was a tough COVID time. You had 83 cents in 2019, that dropped to 3 cents in 2020. 2021 got to 63 cents. This year, you could be up to 92 cents, so that's a pretty big jump. And then beyond that, it would be projected to grow to $1.65. So some signs of life in this one. Again, I'm not going to pretend I understand all the things that they do, but it could be an interesting one to check out. All right, last edition is FANG, Diamondback Energy, the real FANG stock, if you will, FANG. And they've had a pretty good year, plus 30% over the past 12 months. You have an EPS forward of $24.89, forward PE of only 5.21, and a dividend forward of $3. So that's kind of interesting, particularly with the way energy's going. Market cap, $28.5 billion. If we go down to the description, Diamondback Energy is an independent oil and natural gas company, acquisition, development, exploration, and exploitation of unconventional and onshore oil and natural gas reserves in the Permian Basin of West Texas. It focuses on the development of the Sprayberry and Wolfcamp formations. I'm not going to pretend to know about that, but you get the gist. 870 employees, founded in 2007. Obviously, the sector's energy, oil and gas exploration and production, based in Midland, Texas. Okay, so pretty interesting there on a couple of oil and energy stocks being added, another semiconductor. As of December 9th, 2022, here's the sector allocation for the QQQ. You have 50% information technology, 15% communication services, 14% in consumer discretionary, 7.7% in healthcare, 7% in consumer staples, 3.87% in industrials, and 1.49% in utilities. So as I alluded to in the beginning of this video, yes, 50 some odd percent in information technology. And quite honestly, despite these new additions and deletions, this grouping isn't going to change a whole heck of a lot because the top holdings of the Q represent such a high weight to the overall index. So in fact, they're right here, top holdings and percentage of funds. So you start at the top here at almost 13%. You have Apple, Microsoft at 10%, Amazon at 5%, NVIDIA 3.38%. You got 2 Alphabet, so Alphabet will actually move up to number 3 if you add 3.25 and 3.15. That would get you to 6.4% of the fund. And then going from there, Tesla, PepsiCo, Meta, and Broadcom. So very roughly here, these names that I just read off are 50% of the QQQ's total holdings. Reconstitution will change some things, but it's not really going to change the amount that amount of Apple they hold, for example, because that would be based on market cap and has nothing to do with who's added or removed from the index itself. All right, guys, so that's the Reconstitution event here in 2022 for 2023. You'll see those names pop in and around December 19th. As far as does this have any impact on my bullishness for the Qs and TQs and all that, it's almost inconsequential. It's interesting to read and see what happens. And overall, I mean, take out the Rivian. I would say that, generally speaking, I was interested in, let's just call it 4 of those 6 names. But their percentage is going to be so low that it's not going to have a major impact. So don't get nervous if you're in the Qs and you're like, oh my God, Rivian, it doesn't even make money. This is horrible. It's just the smallest part. It's about the amount of shares maybe that you want of Rivian total, like very low exposure. And if it blows up over the next 5 years, just like Tesla, it will climb in market cap. And eventually, if it proves successful, it'll reach a more noticeable point of market cap, and you'll have it just by doing nothing, which is exactly the type of thing you're looking for in ETF investing. Okay, before you go, don't forget to check out that Seeking Alpha special offer. My affiliate link is in the description, and let me know what you think of the additions and deletions here in the Nasdaq 100 looking ahead to 2023. Hope everybody's doing well. We'll see you on the next video.